Good morning, everyone. Welcome to the morning meet of IndiaNivesh. This is Mehul Kothari from the research desk. Today is 27th Jan 2020. Well, it was an action-packed week on the D Street, wherein we witnessed a tug-of-war between the bulls and the bears. But eventually, the bears prevailed. The index Nifty spot registered a new lifetime high of 12430 on Monday, but nosed out to the level of 12,100 mark in the next couple of sessions. However, in the recent session, the index managed to recover some of its losses. The index Nifty ended the week with a loss of around 0.8%, whereas the Nifty Bank Index lost around 1% from its previous close. Initially, the market breadth remained in the favor of declining counters during the first half of the week. However, it turned positive in the past couple of sessions. On the sectoral front, if we see Nifty Energy and Nifty Metal stocks were the worst performers. Among the gainers, the Nifty Midcap 100 and Nifty Realty counters ended with decent gains. Coming to the derivatives part, during the entire week, if you see, in index futures, FI remained seller of around 2341 crores, that is more than 2000 crore uh, rupees of selling was there during the entire week in index futures. So if we look at the participant wise open positions, we can conclude that there was some heavy short addition by the FIs in index futures. In index option, they bought options worth around 888 crores. The buying in options was due to short covering of writing positions in call options. In index futures, there was selling of around 3,444 crore by the FIs. That is higher on the higher side. In cash market, if we see, FIs bought equities worth 5,000 crores, while DIs were sellers of around 2,600 crores. So during the week gone by, volatile price action was witnessed in Nifty futures. Also, there was no significant action in open interest, and volumes too were not very significant. So this indicates that there was lack of direction, and majority of the positions were built intraday and were covered up intraday only. Nothing was carry forward as such. Even the PCR, which was once at 1.68, has cooled down to 1. Then we witnessed a sharp recovery in the market. Now the PCR is again at 1.42. So any increase in PCR from here on could suggest profit booking at higher levels. The premium of Nifty future has reached to 23 points, which was 32 points in the last week. As per the Nifty option chain data, support is now at 12,000 due to open interest concentration of 12 in heavy open interest concentration of around 4 million shares in 12,000 strike put. So on the downside, 12,000 could be a strong hurdle support, for this entire week, because since we are approaching the budget, the volatility will be quite high uh, in this week. On the upside, although 12,300 to 12,400 are resistance as per the option chain and option built up also, but we would like to move slightly higher due to the increase in volatility. So 12,500 remains a hurdle, since there is a huge open interest of around 3.7 million shares in 12,000 strike call. So 12,500 to 12,000 could be the range for this week as per the derivatives data. Coming back to the technicals for the coming week, 12,400 to 12,600 it could be a supply zone, since that is a placement of a couple of resistances. Also, we have been witnessing that there is a negative divergence in Nifty charts on higher degree charts. So we are of the opinion that this could be the final leg of the up move, and a wiser strategy ahead of the budget could be to book longs in this week itself. As far as the levels are concerned, 12,600 to 12,700 technically could be the best case scenario in case of any positive surprises. However, on the downside, a breach of 12,100 from here on uh, would confirm a top formation in the benchmarks for the medium term. So, on the sectoral front, looking at the comparative chart of the Nifty Bank Index, we are evident that Bank Nifty banking stocks have been underperforming since quite some time. Also, Bank Nifty has a major breakdown of head and shoulder pattern, which has a theoretical target of 29,500. So, any rise from here on, even in Bank Nifty, should be used to either exit longs or create fresh short positions. Coming to the individual stocks, we are bearish on HDFC. Uh, which we have been mentioning. Another stock is Dr. Reddy. We are bearish on Dr. Reddy for the coming couple of sessions. Both the stocks has a potential to correct 3 to 5% from here on. On the other hand, traders can keep a watch on stocks like MFSL and Concor for long trade. The technical setup in both these stocks hints towards an upside of around 4 to 5% from the current market price. So MFSL and Concor on the long side, HDFC Limited and Dr. Reddy on the short side. So with this we end the technical view. Now I'll hand it over to Mr. Dharmesh Kant. Thank you very much everyone.
Hi, good morning all. This is Dharmesh Kant, Head of Research at IndiaNivesh, today being 27th of January. The global cues are weak as we open up this morning. Friday had a negative trading session for the US market as the news about coronavirus being spreading was there in circulation. So, as for official confirmation by the government of China, the numbers are pretty less. However, some nurse out there has, issued a statement as a whistleblower where she claims that over 90,000 people have been affected by coronavirus in China, and these are turning to be fatal slowly. So there has been few casualties on account of this virus, and other parts and geographies of the world have also started reporting few cases of the same. So market is taking cognizance of the same and have been down this morning. Even US futures are trading down with a cut of around 1%, and it has already traded down over a cut of 0.5% in Friday's trading session. So some serious profit taking is happening out there in the market. A good part about Indian market being the crude oil prices, which has corrected significantly over 15% from the recent top. So now Brent is trading below $60. So that gives a much needed floor or cushion as far as the macros are concerned. So this is a macro tailwind for our country. Today, this morning, SGX Nifty is pointing to a cut of over 100 points. So when we start the trading session, let's see where it materializes. More or less, it's very much likely that we will start with a cut of around 100 points on the Nifty when we start the trading session. I still maintain the same stance because this is a long week. This is a 6-day week, and budget will be presented on 1st of Feb, which is on Saturday. And with the hope that something will be done in the budget will keep the floor intact, or the buying on corrections would be the theme even going forward. A few of the banks came out with numbers. ICICI bank result was there, though the results were in line with estimate, but the huge jump in profitability which you are seeing in ICICI bank is on account of SR steel recoveries and lower provisioning. But the slippages went high. It was a good amount of slippage which was there. So let's not forget that asset quality has been deteriorating even in case of ICICI bank. Bank of Baroda came out with a very weak set of numbers. Again, the asset quality was a big concern out there, and slippages spiked up further. So these have to be accounted for in coming quarters as far as NPA is concerned. If you look at the entire theme of the bank profitability, or banking Q3 results which have come out, one is very clear that retail, which was the very basis of the growth in the banks for the last couple of years, has been slowing down. And in retail, it has been more of a personal loan or a credit card growth, which is unsecured loan which the banks are providing. And in a slowing down economy where the expectation of that money will come back, or the jobs will be secured, is an alarming fact. Because if you are buying on credit card and if tomorrow your salary doesn't come up, how do you pay that bill? So this is the danger on which all the banks are sitting as of now, because this is what they have been doing for the last couple of years. A scary situation nonetheless. So only one thing can keep the momentum going, or this fear will not play out, is that the growth comes back, the jobs are secured, the salaries are paid, the increments are made, and then only this credit card thing and the personal loan thing which the banks are sitting on can continue to do so. Otherwise, the next round of NPA default will come from personal individual loan, and if that happens, it will be a very big negative for the entire economy. So being on the optimistic side, we do believe that the government will do something great in this budget, and they will address this economy which is sick and getting sicker day by day, and the revival comes back, the salaries are restored, the growth is back. the increments are there. Sorry, and then the all the cycle revives. Otherwise, it's just a hope and dream which we are sitting on as of now. Apart from that, just today, HDFC Limited would be reporting the numbers. Again, you have to look at it very carefully because there would be a one-off item in the HDFC PAT numbers which will make the PAT seems bloated. However, the slippage point and the credit growth has to be looked down very carefully when they report the numbers today. Dr. Reddy's will again come out with the numbers. Expectation is that the numbers will be better than what the street is expecting. So once we have coverage on Dr. Reddy, both in the institutional broking side, and we have picked that stock in the portfolio. We are already getting 6 to 7% return for the price where we initiated a buy recommendation. Post the earnings update, based on our analyst call, we will take a judgmental call on that whether we should go ahead and trade this, keep this in our trading portfolio or not. CIPLA has received four observations by US FDA, and the observations may have some downtake playing out on the CIPLA. Other than that, this morning seems to be jittery on the macro front. However, the good point in the or silver lining of this dark cloud is the Brent crude oil prices, which has been correcting, which will provide a flow to the market. So we will be buying this market on correction, and we'll be on watch out on how the market plays out. That is all from our end. Thank you so much. Have a nice day. Happy trading.